Hey guys, this is Coach Simon with Trade and Perform Trading Coaching, learning how to trade the ES, right? So it's late, it's been a long day, it's 8:30 in the evening, but I felt important to get a trade review out tonight. So I want to talk about two things tonight. The first thing I just want to talk about was just a general price action. The second thing is fear in trading. So first, let's get to this disclaimers, right? That's the fun part of this. Here we go, full screen, right? Important disclaimer and reminder for all traders and investors. This webinar is for educational purposes only and not a recommendation to buy or sell any particular financial instrument. Equities, futures, options, and currency trading have large potential rewards, but also large potential risks. You must be aware of the risks and be willing to accept them in order to invest in the futures and options markets. Absolutely do not trade with money you cannot afford to lose. This website is neither a solicitation nor an offer to buy, sell equities, futures, or options. No representation is being made that any account will or is likely to achieve profits or losses similar to those discussed on this channel. The past performance of any trading system or methodology is not necessarily indicative of future results. Absolutely consult your registered financial advisor and your risk trading plan before ever investing or trading any financial instrument. There, we're done with the yucky part and get on to the fun part. So, my trading in ES is predicated on a very simple idea. I'm going to come all the way up here, right? And that is this, that the market, when I have my drawing tool, don't know where my drawing tool went. I'm going to find it. Maybe we won't. We're having issues. Hold on a second here. Let's get out of that. There we go. So, it's predicated on this idea. The ES will open. It will either open up or down, gap up or down, but at some point in the day, it is going to go down in some form or fashion. It's going to base, and it's going to turn back around and come back up, either to the mid, the high, or go back to the low, right? That's the primary idea, right? Sounds so simple, right? Not only that, but we're predicated on mostly 10 to 20 point rotations. Again, sounds very simple. Wait for a 10-point rotation, look for something like tick divergence, and pop back up. Okay, so here's where that runs into issues, folks. So when you're trading, here is today's chart. And what you will notice about today's chart is it did exactly what we just drew out, just like we planned it out, right? We opened up, we pushed down, we pushed back up, we rolled all the way down, we popped up a little bit on tick divergence, retested, one or two ticked the low, right into the top of the zone. And then we went on a 10-point ride to the high. We came back a little bit, pushed back down, and basically traded sideways through the afternoon. What could be so easy to mess that up? Well, let me tell you what's so easy to mess that up. Why wouldn't we be able to catch this trade? Well, first of all, one of the things that we look for is to often look to check if there are, what will we call this? And this was today's chart, by the way. Here I've been sharing a little bit too much here, but that's all right. We'll fix it. See if I can get this to cut this down a little bit. There we go. Here's the chart 427. And what stands in the way of making that decision? Well, I can answer that question. The market changes, right? So you'll notice the stretch from the high to the low here is from 2386, 2387 down to 2379 basically, right? So not quite 10 points, 8 points within the wheelhouse, right? But in addition, if you look at the whole scope of things, right, what is the market capable of doing? The market is capable of going down 20 points easily in a day. These are all key locations. The highest odds location for today was lying between 2372 and 2370. So this is what happens to your psychology when you are trading that. What you are looking for now you're complicating it, right? Now, which is all right, I do too, right? Because what am I afraid of? I'm afraid I'm going to buy 2379 and watch it go right to 2370. That is how trading works, right? Of course, after it starts to go up, it always looks obvious that I should have bought 2378, right? What we're doing is we're looking for clues within this structure. These zones that I put up, if you watch them on a daily basis, they're really pretty accurate. They fluctuate in accuracy somewhere between, let's call it 65% to be generous, to at times they're 90%, where they actually hold on first touch, right? So if you want to look and see, well, was that accurate, right? We can do that, right? Let's push that out and find out if that was true first. We opened above, right? We tested Globex high, and we pushed right down and closed right into 23.85, 50 to 23.84. The stop's normally 2 points behind, which means your stop would end up being right at 23.82, right? So if you look, if you bought the top of this zone, right, 23.85, we came all the way down, right? We popped back in, but notice we never went to 23.82. Your 2 point stop behind the zone survived, and then it rolled back up. Does that mean that I took the first 5 minutes? No, absolutely not. I want to wait and see what the price action looks like when it starts the day. So there's difficulty number one. I know I've got location, but I want to see price action to confirm, right? Next we roll up, and notice that this time we missed Globex high by about a tick. We finally come in and take care of pushing above, but unable to close above. In the meantime, right, you have a conflict because what we have going over here on the left-hand side, if I can find it, here we go, is NQ. And if you will look on NQ today, on all time frames, we can just look at a 15-minute, right? It was in trend up really since about 4 in the morning. It broke out, and it was just going up all day long, stair-stepping. There was never a point at which it broke a swing low. It looked beautiful. It was a beautiful, beautiful chart. Most of the time, you would expect ES to mimic this chart, but it didn't, right? So now you've got another complication. You're having a tug of war between what's going on with NQ and what's going on with ES. This makes ES very difficult to trade because what everyone is thinking, I promise you, when you're over here looking at NQ and you're like, wow, look, NQ is really driving out of the gate. This is open drive higher on NQ. Okay, this is a 24-hour chart, but trust me, this is pretty much open drive higher, sideways consolidation. I can tell you what I was thinking, and I can tell you what probably the majority of traders were thinking. Majority of traders were thinking, oh, look, this is an opportunity for me to get long and to hold on to ES for it to go up and test the volume point of control from Wednesday, right? And then get up here and test 23.93.50 to 23.94.75, which was my upside trade location, good stretch. That's what I was looking for, right? That plan worked just fine for anyone who bought the dip, except you probably weren't looking to sell at Globex high. Why? Because you're looking at NQ and going, man, NQ is ripping, right? ES is about to rip too. I was thinking the same exact thing, right? Only I didn't buy because of several reasons. First of all, I require a 7 to 10 point rotation in most situations, right? Or an ability to close above the first 5 minute bar, neither of which we got in the first half hour. So I'm stuck with a little bit of frustration. What I'm going through is basically my journal. I want to get long, right? I'm looking for a reason to get long. NQ is giving me a reason to get long, but the price action isn't, right? This whole range is 86 to about 83. Let's just call it 87 to 83. 4 points, right? That's the minimum rotate. That's not even in my minimum wheelhouse of trading. Okay, so I'll tell you what I'm thinking right here. I'm thinking, man, market's going to go break out without me, and it's not giving me a single chance to get back in. Luckily, I have a checklist, and one of that checklists is, do we have ability to close above the first 5 minute high? And now I know there's a problem, right? Because NQ is going up and ES isn't. I'm start to thinking, well, wow, how's that going to work out, right? And as I'm reading the PA, I also notice that as the market pushes up, look at the participation from the broader market. Tick is starting to decline as the market's going higher, right? We start to roll down, and I'm like thinking, okay, hey, this is a pretty good sign. NQ is probably going to roll over. ES is going to lead NQ lower, right? And I'm going to be able to buy on a rotation down. As NQ, I want you to understand how difficult this is. As NQ is going straight up, ES is coming straight down. Undisciplined traders, traders who do not realize there's not always a direct correlation between NQ and ES, there's a loose affiliation, would be a better way to describe that, are looking to get long in here, right? And they are getting bone crushed right here. This is where they give up, right? And there's a whole bunch of price action here that I'm not going to go through and describe, that I describe in my room in real time to help us read the PA. But we basically knew right about here that there was a problem, right? And we knew there was a problem right here when we were unable to close above the first 5 minute high, right? And now we've closed below the first 5 minute high, below the 5 minute low. Huge problem, right? And now this is also a break of IB low. Completely opposite markets at this point, right? That's fine. So we're looking at this and I'm going, okay, guys, no big deal. You know where I'm looking to buy? 23.77.50. Why do I want 23.77.50? This is from pre-market. right? I want 77.50 because it begins the area where we're unauctioned down towards the open gap all the way back at 23.70, and usually first touch of a top of an unauctioned area gets a bounce. Well, guess what's going on here? We get tick divergence in here. We don't quite hit the zone. And I have a little bit of responsibility because normally that zone would be 77.50 to 79.50. I'm trying to show you the difficulty in laying out the zones and going through the thought process. But I didn't want to take 79.50 because I was pretty certain we were going to come back and take 77.50. Watch how the psychology switches here real quick, right? So we get tick divergence into the low. On this bar, this is the low. We one tick the low behind it. This is what I call local 5-minute tick divergence, right? And we get responsive buyers. I get nothing here. I don't have any trade here whatsoever, right? We then come down. I go great. We came within 2 ticks of the zone. Now I think we'll test 77.50. But now this time we come in, and if you'll notice, we clearly have tick divergence now, right? Only when we're hitting these new lows, we're not able to close at new lows. And I realize that now. Here's where I want to show you the frustration. I decide I have to take a risk, right? I have to increase the amount of risk I have allocated to this, that I was going to allocate to this trade, because there's a possibility that we come back to 77.50 before bouncing, and I'm having to take the trade outside the zone. And on this bar right here, when we close at 80, I go, I will take a long at 79.50. Okay, that is right here. This is where I'm looking to take a responsive buy for my own account. Comes back, and it goes right to 79.50 on the bid, and not one single contract fills there, right? This is important, right? I've got location, I've got the zone, I don't quite have the stretch, and I'm trying to balance the fear. What's my fear is that we're going to come back to 77.50 or lower, right? And so I'm trying to balance patience, right? This is where I want to buy. This is where it's giving me the opportunity to buy, and the market is telling me this is where I need to be buying. So there's not much coaching that I can do in mass that applies, right? But we're always trying to balance. I saw some BS. As a matter of fact, I'm going to pull it up, right, so I can show everyone. I don't call people out, or I try not to call people out anymore on Twitter. But this gentleman, he's just full of crap, right? So this guy right here, he put down, let's see where he wrote. He wrote it right in here, and I responded to him. And he wrote about fear, right? Here we go. Mr. Enrique Simos, I think is how you pronounce his name. And he said, you should aim to become a fearless, edge-driven trader. Okay, that's cool. I'm all right with that. You should aim to become fearless. When you hit that, give me a call, because everyone experiences fears, from Navy SEALs to Army snipers to you name it, right? There's all kinds of fears in the world to deal with. Pretending like they don't exist, I'm sorry, it's stupid. They do. Every person here, every trader I spoke with had a different opinion. What kind of fears can you have? I had the fear of not getting filled, and I didn't, right? I also had the fear if I did get filled that we would come to 77.50, and I also had the fear, because I know sometimes the market trades in 15 to 20 point rotations, which, by the way, was only a week and a half ago that we were trading 15 to 20 point rotations, in which case I had the fear that I took the trade early and I'm going to get stopped. So this idea of you should aim to become a fearless, edge-driven trader is total BS. Forgive me. It's total BS. We all instead go the other way. Hey, I'm going to manage my risk. I know I'm scared that I'm going to lose money. All I can do is execute my edge, right? And then as I execute my edge, I'm going to manage my losses, and I'm going to increase and decrease the size of my trades based on the odds of that trade working out. And so I know when I look over here to my left that I'm in a poorly auctioned area, and then that transitions to an unauctioned area. And I know my best shot at getting a rebound is right here at 77.50. So understand, this is a conflict, right? The market's forcing me to step up to 79.50, right? And excuse me, is that right? Yeah, 79.50, right? But with the realization that we may still come back to 77.50, that kind of sucks, right? If the market's not making it easy on me, and all the meantime, I'm looking at NQ going, well, NQ is going straight the hell up. I need to go ahead and just buck up. So I lower my trade size. I try to buy 79.50, and guess what? I get a big fat 0 filled on the trade. What does it immediately do? It breaks, right? I get frustrated, okay? We attempt to push. We can't break over the swing high, but then all of a sudden it seems like everyone realizes right at the end of New York lunch that, hey, the NASDAQ's going up, and it launches like a rocket ship. Now let me show you what the problem is with this. Everyone's looking at ES making lower lows and lower highs. And what are they thinking? I'm going to take the mid, and I'm going to short it on the way back. See how the mid came right there? See that doji right here? This is really important that you see this. See that doji right here? I'm going to make it big and fat, circle it. I'm in an interesting mood tonight. See this right here? This is people who got to the 50 retrace, noticing the lower lows and lower highs, thinking we are going to go to 75 or 71, right, or 77, somewhere in there. And they're thinking, I'm getting a great trade. I'm getting 83. And they're also thinking, they're thinking they're being smart, right? And let me tell you what they're being smart about. They're like, hey, the rotation down was from 87 all the way down to 78, 75. We're making lower lows. This is a rotation from 79, let's just call it, all the way up to 84. It's a 6-point rotation. That's about in the wheelhouse of a larger rotation than what we've been experiencing all day long. And you'll notice tick, right, as we're pushing in here, was diverging slightly into the 50 retrace, right? Now, I have a policy in the top third of the range. I don't want to be short. The reason why I don't want to be short is it because, for me, it becomes a 50-50 proposition, and I need a 70% win rate just to keep my head above water. I hate boom-bust cycles. I hate digging out of holes. Hate it. Okay? So I'm not going to short in the top third. Plus, what do you have over here? NASDAQ whistling past the graveyard going, hey, we don't care about no 50 retrace. We're just going to keep going, right? So guess what happened to everyone who shorted here? You want to know why this market went wham with 2 huge bars right here? Because everyone got scared that they were wrong, right? That the market was going to go up, test the naked volume, the prior day's volume point of control, and come up to 93, 94. If they were not scared, why else would everyone just plow into the S&P futures here, right? Until we got them exhausted, right? We had a big rotation, we got them exhausted, and then look, you want to know how I also know they were scared? And then the longs got brave. You want to know why? Because look how long they took to bring it down at all remotely, right? So my point behind this, I had the zone in the right location, right? I was patient. I waited for the rotation down. I didn't short, which saved me in the afternoon a buttload of money, right? And in the morning, I recognized that we couldn't get above the first 5-minute high and that I probably didn't need to be fishing for longs. And I recognized that we were now broken right here. This is from this morning. I did not add this. This is from this morning in the trade room, right? That there was a problem starting on this bar because I'm very good at reading price action, and I emphasize the price action while we're looking at the zones to add to our edge, right? It's like, again, I'm going to go back to the blackjack deal. If you follow Edward Thorpe, right? He has a system of rules. If you followed that rules, it gave you a 0.29% edge over the house. Even today, if you go play blackjack, 0.29% over the house if you play blackjack, following his rules. He's proven it over and over and over again mathematically. But if you follow his card counting methodology and you can pull it off, right, and actually count the cards, it moves your edge to almost 5% over the house, which is huge, right? If you add the Kelly betting system where he can fluctuate bet size as he's moving through the day, now he has an enormous edge over the casino and he's able to pull millions of dollars out of it. He wrote a great book about markets and trading, if you're ever interested, called A Man for All Markets. I wasn't paid for that promo. It's a great book. It's a little geeky, but I highly recommend it, right? So notice, I didn't get the short over here, but I don't care because I didn't get run over here, right? There is fear in the market. Understand that market operates on greed and fear. Pretending like you are fearless is just setting yourself up to overtrade, right? Get run over at key locations. Be fearless at the 50 retrace at the top third of the market. Go ahead in the afternoon. Watch. You will experience fear as you get your butt run over. I promise you, right? Market isn't about being fearless. The market's about recognizing your own fears, your own inability to read the market perfectly, right? And then improvising by reading in real time the price action, what the larger market's doing. That's what the tick tells you, right? And watch when they're working in conjunction, and importantly, waiting for markets that trade similarly, NQ and ES, to align, because when they're out of alignment, you get nasty little runs like this, right? Or you go, it has to follow NQ, and you get run over to the downside. Now, if that's not enough uncertainty in the market for you to, and you still think you're fearless, right? Well, maybe you are then in that case. My point is, even with all this information, right? The zone's held. We came within right to the top tick of this zone, right? I even modified and tried to get 79.50. And you want to talk about the fear. What do you think FOMO is? Fear of missing out, right? Well, I got FOMO'd right here because I didn't get filled on my trade, and off it goes like a rocket ship, right? Very disappointing. So, and then the last trade, I'll show you the afternoon. This was a trade in the afternoon, and I took long here because of a read I had between the tick and the lack of counter rotation lower. And I took it at 86, and when it got to 87, went in the room and I said, hey, I'm taking a scale at 87, half, right? And then you have to make a decision. You can either move your stop to true break even and keep your half point bagged, right? And if it stops you, it stops you. Wasn't much room, right? You can move it to 85, right? That gave you 2 points of rotation size wiggle room, because remember, NQ still rocking the house, right? So I'm thinking ES is going to follow through and come up here. So you can move it to your original, you can move it down 1 point behind your original entry and come out net zero, or you can put it 1 tick below swing low. Now, what I opted for was 85, which meant I was going to donate the point back that I took on my first scale if it hit, right? But guess what happened when this started creeping down right here? I started going, wow, I really hope it doesn't hit my stop. Guess what that is, guys? That's fear, right? I am fearing my stop will get hit. Why? Because I had a lot of hope and interest in the market coming up and hitting 89 3/4. Okay? Additionally, and I want to make this other point, we all know when we look at the volume profile chart, let's pull that up. If you've been trading ES for any amount of time, you know that it likes to back and fill. Let's pull this down. It likes to back and fill. There's a lot of place to back and fill here, right? See where we bounced from? Look at the upness that we've just had. Let me count this before this. 1, 2, 3, 4, 5, 6, 7, 8 days without being able to trade below the prior day's low. I didn't say close below the prior day's low. I said trade below the prior day's low. Today's the first day we accomplished that, right? Everyone has been thinking all along, hey, we've got to come back in and fill these gaps. If you don't believe me, go look on StockTwits sometimes and some of the crap that people put out there, right? Market doesn't have to do anything. You keep going up all at once. It can go out and break out for all we care. There is no rule about it, okay? And it can work off overbought conditions by trading sideways. It can even trade sideways for a long time, looking like it's working off an overbought condition, and then drop. There's no rule, guys. All there is price action, right? There's monitoring the behavior of the broader market, that's the NYSE, against the price action in the S&P 500, right? And then knowing where your key areas are. I base those off of volume profile, okay? If someone tries to sell you that there is no fear or this is an easy job, it's not. You're constantly balancing what NASDAQ is doing against the S&P, whether we're in a bull move or a bear move, whether the rotation is 5 to 10 points or if the rotation is 10 to 20, or if we're at the bottom third of the range, if it's 30 to 50, and that constantly changes, okay? Your job is to get comfortable feeling uncomfortable, knowing where you're willing to put on risk, what your high odds trades are, which we constantly hammer in the room. I do. These are my high odds trades, right? And they don't always show up, right? It's really hard to get a high odds trade to show up when one market's heading north and the other market's heading south, right? And what I hope to do in that situation, right, what the best possible outcome I could have on a day like today is either squeeze a little profit out, right, but not get run over, because there was tons of opportunity in the way that this market operated, right? There was tons of opportunity here today to make one wrong decision, right? NASDAQ's going up. I'm going long on the 50-60 pullback. Whack, you got stopped. Oh, market's going down. NASDAQ will probably follow ES lower. ES is the leader market, right? And you get snapped on the upside. Very easy to lose money. And if you're not fearful of this, one of two things are going. Either maybe something psychologically wrong with you, right? Or right? Or you just don't care about how much money you lose and you're just in the market to trade the action, which a lot of people are, right? Personally, I hate losing money. I look for high odds entries. I look for markets to sync up, right? And I look to get my heaviest leverage in areas where there's less questionability about auctioning through a poorly auctioned area or an unauctioned area. Anyways, I went way over what I wanted to say. That guy kind of pissed me off because then what happens is, and I have enough coaching clients to know this, that people end up feeling dumb because they were scared to take a trade, or they're too scared to take a long, or they can't pull the trigger, or they overtrade, and then they go, but I'm fearless, right? Well, yeah, you're fearless, but you're losing your ass, right? So maybe a little bit of fear is good for you in that case, right? Or you have the other case, I can't pull the trigger, I'm too scared, it's not setting up perfectly, right? And then you need a little bit of help of going, well, what's your odds? And we do that by going over and over and over. What are the setups that repeat? What do they look like when they repeat? And how do we hit those? And that's what we do in the room. Anyways, anyone who would like to visit the room and see what we do, I offer a 5-day trial in the room. Email me at tradeandperform@gmail.com. I'll set that up for you. I don't have anything else to add other than we are due for a pullback. If we get into this area, it could get pretty slippery from 77 to 70. Rotation size right now is sub 10 points. It'd be great if we came back to 10 to 15. It's rare to double the rotation size, but the clue will be the overnight rotation. Right now, Asia is pretty tight. It's 84.50 to 86.75, 2 points. Amazon had good earnings. There's not much keeping us from going up except that we're already extended, right? And lots of people have been looking for a push down. And as long as people keep looking for a push down without getting the setup and getting cooperation from both markets, there will continue to be moves like this where shorts get run over, right? And you'll notice where the greater amount of fear was. You can see this push down was mild, right? This push up, this was brutal. This just went vertical on people. And it's very, very hard to deal with this from a covering standpoint. And then the funny thing about that is what most likely happened is someone decided, well, now we're over the first 5-minute high. We've broken out. Let me get long here for a push back up. And either they didn't know how to manage this small rotation area, and they ended up getting stopped into the 50-60 retrace, right? So the market can be a cruel place, guys, and it's okay to be scared. But there's also a way to combat that. The way to combat that is to have a trade plan, to know what your setups look like, right? To be patient with your execution, to be nice to yourself, meditate to keep a calm mind, right? And work every day to be the best trader you're capable of being, right? And make it okay not to have to trade and not to have to make money on a daily basis. My name is Simon. Y'all have a great night. Trade well tomorrow. I hope everyone makes a lot of money. Have a good night, guys.